Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, educational language. I'm your host here at AlgoBot, and today we're exploring an expert advisor called phase space analog projection. This is a data-driven strategy that treats price not as a collection of chart patterns, but as the output of a hidden dynamical system. By the end of this video, you'll understand how it reconstructs the market's recent state from raw returns, hunts through history for lookalike moments, and projects a short-term forecast from what those lookalikes did next. Everything here is for educational purposes only and is not financial advice. Let's get started. So what exactly does this expert advisor do? Phase space analog projection is built entirely from raw price data, just the open, high, low, and close of each bar. It uses no traditional chart indicators, no support and resistance lines, and no pattern drawing. Instead, it borrows an idea from the study of dynamical systems. The thinking goes like this. If the market carries any internal memory at all, then its recent behavior can be described as a single point moving through an abstract space. The strategy reconstructs that point using something called delay coordinates, essentially a short sequence of the most recent one-bar log returns, stacked together into a single state vector. Once it knows where the market sits in this reconstructed space, it searches its own history for moments that looked almost identical, what the strategy calls dynamical analogs. For each of those historical lookalikes, it already knows what happened next, because that future has already played out. It blends those known outcomes together, giving more weight to the closest geometric matches, and produces a single number, the projected move over the next several bars. The strategy runs on a single time frame, on whatever chart you attach it to, and it is designed for liquid markets, major foreign exchange pairs, metals like gold, stock indices, or major cryptocurrencies. Anything with continuous, smoothly scaled prices. Because it learns from whatever the historical analogs actually did next, it does not force a trend following or a mean reverting view. In a persistent market, the projection tends to point with the recent move. In a choppy, reverting market, it can point against it. The same engine quietly flips its behavior as conditions change. That makes it best suited to traders who are curious about quantitative, model-driven approaches and who want to study how a forecasting engine behaves. As always, trading carries real risk, and losses are a normal part of the process. Let's walk through the logic step by step. The expert advisor acts once per newly closed bar, so it makes one calm decision per bar rather than reacting to every tick. On each new bar, it appends the last closed bar to a rolling library of history, by default around 1,000 bars of searchable material. First, it converts prices into one-bar log returns, which simply measure the percentage style change from one close to the next. It then builds the current state vector from the most recent returns. With the default embedding dimension of 4, that state is the last 4 returns stacked together. This vector is the market's current position in the reconstructed phase space. Next comes the search. The strategy scans every past moment where a full state was defined and where the future outcome is already known. For each candidate, it measures the Euclidean distance to the current state, how geometrically similar that past moment was to right now. It ranks all candidates by distance and greedily selects the 10 nearest, subject to a rule called the Thaler window. That window forces the selected analogs to be separated in time by at least the larger of the horizon and the embedding dimension, so the strategy never counts one overlapping stretch of history several times. Each analog is a distinct episode. For each chosen analog, the strategy looks up what actually happened next, the realized forward return over the horizon, which defaults to 6 bars ahead. It averages those realized futures, weighting the closest matches exponentially more heavily. That weighted average is the forecast, F, the expected move over the next several bars given today's geometry. Now the decision. The strategy compares F against a threshold expressed in volatility units, the ThresholdSigma, times the return standard deviation, times the square root of the horizon. This makes the bar breathe with the market. If F rises above the positive threshold, the desired direction is long. If F falls below the negative threshold, the desired direction is short. But there's one more filter, the agreement gate. At least 60% of the selected analogs must share the sign of F, otherwise the signal is treated as noise and rejected. When flat and a confirmed projection appears, the EA opens a market order. The stop loss is placed 2 ATR away, and the take profit 3 ATR away, giving a reward-to-risk shape of 3-2. While a trade is open, it can exit in 3 ways. The ATR stop or target is reached, the live projection flips against the position, or the forecast horizon elapses, the projection's natural shelf life. Let's read through the MQL5 code as if we were sitting in MetaEditor. At the top are the input parameters. Embed dimension sets how many recent returns make up the state vector, defaulting to 4. Neighbors is the number of analogs pooled, 10 by default. Horizon is how many bars ahead we forecast, and ThresholdSigma sets how far the projection must clear before we act. Min agreement, at 60%, is the fraction of analogs that must share the same direction. Then come the library size, the ATR period, the stop and target multipliers, and the fixed lot size. Now the signal block. The code calls forecast to build the projection. It computes the return standard deviation, then a threshold equal to ThresholdSigma times the square root of the horizon. If the agreement is at least the minimum, it checks the forecast. When the forecast is greater than the positive threshold, desired is set to 1. That's the long condition. When the forecast is less than the negative threshold, desired is set to -1. That's the short condition. Notice both sides use the very same machinery, just mirrored around 0. Finally, the entry block. It computes the stop loss and take profit from ATR. For a long, the stop sits below price and the target above. For a short, the stop sits above and the target below. Then, if the direction is long, it calls trade.buy with those stop and target levels. Otherwise, it calls trade.sell. Both orders carry the fixed lot size and a comment tag identifying the strategy. Let's bring this to life on the chart. Along the top, you see the candles. In the subpanel below, the gold line is the forecast F, the strategy's projected move over the next several bars. Notice this is not an oscillator measuring how stretched price is. It is the model's own prediction, built from historical analogs. The green dashed line above is the long threshold, the red dashed line below is the short threshold, and the flat gray line in the middle is 0. A signal only appears when the forecast pushes clear of one of those threshold lines and enough analogs agree. Look at the first 2 candles. Price is drifting quietly sideways, but underneath, the forecast is already climbing from near 0 toward the green line. The recent geometry is starting to resemble past episodes that were followed by an upward drift. On the third candle, that's candle index 2, the forecast crosses above the green long threshold, and the agreement gate is satisfied. That's our buy entry marker. As the position opens, the stop loss is set 2 ATR below, and the take profit target is placed 3 ATR above, giving that 3-2 reward to risk shape. Now watch price follow through. Over the next 3 candles, the market rallies steadily higher, and the forecast stays comfortably up in the green signal zone, confirming that the projected move is holding its shape. By the 6th candle, price reaches the take profit target, and the long trade closes at that upper marker. Even if it hadn't, the forecast horizon of 6 bars is approaching, so the projection's shelf life would soon prompt a time-based exit anyway. Then the character of the market changes. On the very next candle, that tall up move stalls and closes back down near where it opened. In the subpanel, the forecast collapses. It drops straight through 0 and pushes below the red short threshold. The recent geometry now matches historical episodes that were followed by a decline, and again the analogs agree. That's our sell entry marker. This time the stop loss sits 2 ATR above price, and the take profit target 3 ATR below. From there, follow the sequence down. Across the next 3 candles, price steps lower, and the forecast stays deep in the red short signal zone, holding its downward conviction. On the final candle, price reaches the lower take profit target, and the short trade closes at that marker. Notice the elegant symmetry here. The long and the short used exactly the same engine, just mirrored around 0. Nothing in the code says trend or reverse. The strategy simply projected forward from whatever its closest historical analogs actually did next, cleared the volatility-scaled threshold, passed the agreement gate, and managed each trade with an ATR stop, an ATR target, and a horizon-based time stop. That adaptive, evidence-driven behavior is the whole idea behind phase space analog projection. That brings us to the end of our look at phase space analog projection. We covered how it reconstructs the market's recent state from raw log returns, how it searches history for dynamical analogs, and how it blends their known futures into a single projected move. We saw the agreement gate and the Thaler window that keep the signal honest, and we walked through both a long and a short example, each managed with ATR stops, ATR targets, and a horizon time stop. Remember, this video is educational content only. It is not financial advice, not a recommendation, and not a solicitation to trade. Every strategy carries real risk, and losses are part of trading. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to explore next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.